a little push, take the power of the wind, yeah, move the dynamo, and never need to tell to my parent to buy batteries. And that is the first time that I remember that I have an idea. And it's the idea of a child, obviously. But I think this kind of thinking came to me because I have two very special persons in my life. My father. My father is an artisan, yeah, and my uncle. My uncle is like a math scientist, and is a very strange person that developed a strange machine to make bricks, yeah, and another thing, and windows, and this is my playground when I was young, yeah, and this kind of things make me that always try to solve this question: how might we? ¿Cómo, sorry for saying to Spanish, ¿cómo puedo solucionar esto? How might I? This is one of the most important questions when you are in an innovation process. If you study or go to a conference about design thinking, this is one of the base of all, okay, right. These little histories that appear in my mind, when I was young, I read a lot of, there are a lot of people that have the same problem, yeah? Visualize things. Tesla saw in his mind the solutions maybe 10, 12 years after he developed. This is the first continuous engine. Tesla tried to develop for 8 years, and it's very difficult for her because he saw in his mind, but he can't develop. Only the tenacity and try to work and work hard make it possible. Yeah, I never developed this strange machine that I saw you when I was a child. Yeah, what is the connection of this kind of thing that I am trying to tell you with the question of corruption? Okay, yeah, okay, and try to go to this point. There are very different ways to think what happened right now: the biological and the synthetic. And this is una confrontación. This is a fight, yeah. And right now is the big, for me, is the big question to solve. Yeah, normally we use technological metaphors to understand the world that we are creating. Yeah, normally it use the word technology for things that they don't know, the utility or what is the use of this. Normally, nobody say about the television technology. It's not technology, it's television. Yeah, but when you are talking about artificial intelligence, you are talking about technology, because it's difficult to understand. We use the reality that, you know, yeah, this table, these windows, this door, this smell, the things that I see, the things that I hear, to develop a world that can be understood by ourselves. This is the things that I call biological metaphors. Okay, right. It's very easy. Yeah, I can hear, I can see, I can smell, I can touch, and create a world about these kind of things. Yeah, maybe this is the classic metaphor or digital metaphor that all the people understand that this is a file in a computer, yeah, normally. And all the people think that this is a trust, or if you are using a Mac, you can drop the pen drive or the CD, etc. This is a digital metaphor. Yeah, or maybe this is an email. My young cousin don't know email like a like a paper, yeah? Only thing only show this concept like digital. Or maybe more advanced that a digital nose, etc. And they are doing the same thing with the artificial intelligence. And this is the new way to think. We are using neural network, and this kind of network work in the same way as or trying to work in the same way that our mind or our brain. And maybe the things need to change to go to more specific goals, or to take advantage, or maybe in a next or in a closer future, have a better world with more transparency, no corruption, etc., etc. Yeah. When I say synthetic metaphors, I am trying to explain a very concrete thing. It's the way when the technology exists, but there are breakpoints, and there appear new uses of technology. This is the moment that you don't have the reference. You don't need the trust to eliminate a file in a computer. The use of the technology is independent. That's the beginning of this kind of technology. To try to understand this, yeah, this is one of the, for me, is the most important graph to understand the actual technology world. Yeah, if you see the first graph, the red, a centralized net is like estoy intentando encontrar el ejemplo en mi cabeza, perdón. Es como si fuera un sistema centralizado de pago. Yeah, a credit card. Yeah, if you lose the center node, all the other nodes don't have communication. Yeah, and this is a problem now in technology. You can go to the second step is a decentralized net, but you have the same problem. Yeah, if you lose or some points or some nodes disappear, the other part don't run, and it's cost and have problem. All the projects that I understand right now are based in distributed net, or distributed. It's like a peer-to-peer, etc. This is maybe all the people use, or in many years ago, this kind of tools. This is a big torrent program, yeah? And this is technical, very complex, and it's the same that probably all the people know about that. But this and these are the same, and is developed in this kind of net, in distributed net. And now, if you look at this graph, if you see blockchain is the breakpoint. Yeah, it's not the origin of the technology, of the use, or the technology of peer-to-peer start at first to transfer a lot of information with a low cost. Yeah, but with you apply this kind of technology to the blockchain, appear a breakpoint, and appear new uses of technology. I different between money, cryptomonedas, etc., and blockchain. For me, it's separate technologies. Okay, right? Sorry, cryptomonedas, cryptocurrency is a financial problem. Yeah, it's not important for me right now. There are a very important financial people and economic people talking today. Yeah, for me it's important the use of the blockchain to guarantee anything. Maybe the integrity of a file, or the integrity of a document, or the integrity of a data. This is the most important part of this kind of technology. We use a simple rule to run these kind of things. Yeah, for me, it's very, very important to explain that you need to take some steps, yeah, from data to information to knowledge to wisdom, to have an artificial intelligence system working right, or in the best way. Artificial intelligence serves a single but potential transformative economic purpose, a significant lower cost of prediction. Yeah, this is a paper, a very interesting paper that Manuel sent to me some time ago. And I see that están las notas en español puestas ahí. ¿Vale? Ese coste, this cost, ¿vale? Is very, very important because you need to start all the artificial intelligence system need to start in a point, in a concrete point, is the data. If you don't have data, you can do nothing about technology. You cannot build an artificial intelligence system without data. This does not mean that we necessarily use millions of data. Maybe people are very confused with big data, neural network, machine learning, etc. No, it's very, very simple. This is the reason that I use this kind of graph, because if you understand this, you can understand all the things about artificial intelligence, machine learning, and this kind of technology. Okay? Data is the origin, is the part when you start to transform, to get to the field, the data from the field, and to change. And to change is very, very important. This is the start for every system. It's very, very important, yeah, to think that if my data is not correct, yeah, all the steps that I will do are incorrect. Yeah. Normally, this is the most important part because the data is corrupt. All the things that happen after that is corrupt. I can build the best artificial intelligence system in the world, but if it's wrong in his data, it's wrong. It's wrong. Or maybe it's used to confuse, or maybe it's corrupt, or use it for no transparency, or whatever. If you compare the ability of a machine or the ability of a human, yeah, you found some difference, because human normally tends, or they have the possibility to be corruption, influence, negative sentiments, because if you are working with machine, I'm very comfortable working with machine, yeah. The fails or the errors is maybe electric fails, an algorithm, but the algorithm fails is because normally it's developed for a human, yeah, or maybe hardware resource. This is the real confrontation when you try to make a big system to try to solve big problem. Yeah, we normally use this the part of the top of the graph. Yeah, you see the machine learning. The feature extraction, yeah, is doing for humans, and this is the problem. Yeah? We think that if you are working in public administration and you have a problem of corruption, yeah, the problem of corruption is the person. But if you use a system like a machine learning or whatever system where the people are in this feature extraction, the possibility of corruption or the possibility of strange things happen is a real possibility. Yeah, for that I prefer, or maybe we need to develop the technology through a deep learning or system that the human can touch the data. We transform the data to information. Yeah, this is a important part because with the data I can do nothing. Yeah, that is only the source of the things, but maybe you have tons and tons of gigas of data, but it's not important because you need to transform in a form that you can understand and you can work with. Yeah, we transform the information into information through the technology and help us to visualize, define, crop, etc. This is the first photo camera in the world. Yeah. Normally the painters in this epoch use the camera oscura, I don't know the word in English. Yep, thank you. Used to copy the fields when painting. From this is to this. The only difference is the transformation to the data to the information. Instagram is very, very similar to a dark room, yeah. But the only thing is with the dark room only have data. With Instagram you have information. Se ha realizado una transformación, es decir, hemos conseguido. We transform the data into information. Very, very simple. And you can understand that this is a photo or you like and etc. Yeah. After that, you need to develop knowledge. This is very, very difficult because the knowledge is a part of our biology. Yeah, the machine don't have knowledge. The machine only have a good way to make algebra, etc. But they don't know knowledge. The knowledge is a human capacity. And as I say at first, this is the first time, okay, that we have delegated our intelligence to a third party. We try to have the humanity try to have to the. Estamos intentando, perdonar, a veces utilizo el español para desatascar mi cabeza. Estamos intentando que las máquinas piensen. We are trying to the machine, not intelligent, it's about thinking, or it's about knowledge. And it's very, very difficult. And it's a big responsibility, because they don't know where to go with these kind of things. But only, for now, are delegating something like calculus. Yeah, and possibilities of prediction, etc., etc. It's cheaper to do this kind of thing with machine at this time. But maybe all the things that do now with machine can do with humans. Okay, right? It's a cost. Can we do a Google search service but without computer? Yes. Yeah, you can do it. You can send a postcard to your query, blah, 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 in some time, in a few days, you receive your query. Yeah, it's okay, but how much is cost? Yeah, I use this example to say, not the big problem in artificial intelligence is that right now only replicate the world that we know. Yeah, makes sense to. Okay, this is the most important, and there are two things that is very, very important to know, because the machines are very good in prediction, and humans are very good in emotions. Yeah, and because emotions are the most important part for us to take a decision. When you have an accident and you have some lessons in the front part of your brain, sometimes some people don't have emotion. Yeah, it's an investigation of maybe appeared 3 years ago. Yeah, and the doctor that say that the phone, the way that if you don't have an emotion, it's impossible to take a decision. This is for human, it's complicated, but for machines are good, because if you put apart the emotion, yeah, if the machine don't have emotions, don't need to make strange things in maybe to be corrupt. Yeah, it makes sense that I am trying to say. It's a little bit difficult to me to explain, but I try to explain again, but this is very important. Si no tenemos, sorry for changing the language. Si no tenemos emoción, nosotros como personas, como humanos, no somos capaces de tomar una decisión sin una emoción. ¿Vale? Y eso es una realidad, y es un hecho constatado, científico. Lo bueno de las máquinas es que no necesitan la emoción para tomar decisiones, y eso nos abre un nuevo abanico completamente distinto a la hora de solventar graves problemas. To solve the real problems in economics, like corruption, for me is very important because I live in Spain, and in Spain there are a lot of corruption, yeah, a lot of corruption. And it's very, very important to substitute or to apart or delegate function for human where the emotions are important. But if emotion can change the life of a person, of a country, yeah, si esa emoción que lleva a una persona, a un funcionario corrupto, a preferir comprarse, como comentaba antes, un Aston Martin, ¿vale?, con dinero que no es suyo, sino que es de todos, porque es su emoción, es mejor sustituirlo por una máquina. Esa es mi idea principal. Because the machines don't have emotion, and this is very, very important. And the machines, maybe in the future, have another kind of emotion. I'm not sure if a machine needs to have a Aston Martin. Yeah, I think that the machine don't need that. Yeah, but in the synthetic world, maybe change. But this is the most important part. And in the 4th point, yeah, information, data, information, knowledge, and wisdom, sabiduría. In English and in Spanish hay ciertas variaciones, ¿vale?, de esta palabra. This sabiduría, or this wisdom, for machines is something that at now we don't know what will be happen. Okay, it's maybe an ethic, and maybe no, we don't know what happened with wisdom in a future. It's a question that we are working on. We are trying to know if the part of ethics of the artificial intelligence, the part this is important part in philosophy. Yeah. We know normally we saw the machines like in a film, like Terminator. Yeah, a strange machine that kill all the humanity. Oh, yeah, but I think maybe it's not the most probably part of the artificial intelligence. Maybe a Terminator of the corruption in the world. Yeah, I think it's more probably that artificial intelligence was the Terminator for for people that are doing the things in the wrong way of the. Okay. And after that, we try to we have a lot of questions to answer because they don't know, nobody knows nothing about artificial intelligence. Okay, right? We are start. This is the start point. Yeah, no, it's not it's only used for it's only service you can buy in a cloud. Yeah? Es muy sencillo contratar servicios de inteligencia artificial, pero eso yo ni siquiera lo llevo a considerar inteligencia artificial. ¿vale? Porque en verdad lo que estamos haciendo es utilizar potencia de cálculo, ¿vale? Y use terms of... Okay, yeah, only 2 slides more, okay. And when work with artificial intelligence, maybe we create another new synthetic metaphors or create another synthetic feeling. So we don't know what happened with artificial intelligence. Yeah, but this is in the start point of what happened. Maybe this is the best resume, yeah, and this is the last slide. I think that technology is in this point. The new uses of technology is starting. Yeah, there are no in my vision, there are no a break point. Now, I think it's not close to a break point at today. But I think that all the things that come when this break point come to a reality, that change the rules of the world. Yeah, and if it's the first time that we have delegate our intelligence to a third party, as human, as our responsibility to make the best use of that new form of intelligent capacity to improve the life of all the people. This is, for me, this is the core of my thinking. And this is, I'm sorry for my English again, I only try to explain this. We have a very, very important responsibility, yeah? And this change, the use of this new intelligence can change the life of the people to the wrong way or to the right way. Yeah, it's our decision, the use of this kind. And nothing more. Thank you.
Well, thank you. So I think that one of the things that we are getting from your talk, just to make sure, is that we have to change our frame of mind, that
yep.
we are approaching problems in the old way, but now artificial intelligence is different. For instance, Microsoft is also trying to do research as to how humans should be related to machines and things like that. So, but before, I want to introduce Walter Friedrich. He's a student of the, well, already finished, of the global MBA program in Espanol. He's a lawyer, so you see we are safe. And on top of that, he's organizing a few technology and sport companies. So thank you so much for coming to participate. Thank you.
Thank you for the presentation. It's good, very good. No, we are on the same place. There are only 2 questions I want to make. First, artificial intelligence and robots are growing so fast, and I would like to ask you if you know of, or you think that it might be a crisis soon, or a crash soon, because this growth is like no one can imagine how fast it is.
Yeah.
That's in the first place. And do you think then there will be a time that the machines will cause damages? And do you think those damages, those machines would be treated in terms of liability different from the owner or the creator, or like a person itself?
Yeah, I think all the time, and this is a philosophical question, all the time all the people think that our generation is the last generation on Earth. And this is a problem, because you think that, that you are the last one and say, hey, bye, the world is ending, climate change, whatever, a lot of things. And artificial intelligence is very influenced by science fiction. Yeah, and all the people have in mind Terminator, killing humans. No, I prefer killing corrupt people, if in this way. Maybe, Terminator. Maybe there are this kind of crash. Yeah, it's very. Está, sorry for changing to Spanish. Está muy relacionado con esa idea filosófica de que somos los últimos sobre la Tierra. Entonces, si nosotros somos capaces de abstraernos lo suficiente como para pensar que las máquinas no huelen, no sienten, generan nuevos sentimientos, generan nuevas cosas, esa idea de ese crash, de esa ruptura completa, ¿vale?, en el que seremos gobernados por máquinas, posiblemente, ¿no? Esa idea que es muy marketingiana porque vende muy bien, ¿vale? Esa idea no es tan real, ¿vale? No es tan real. Llevamos viendo coches que vuelan, no sé, desde que yo veo la tele, desde que era pequeño, ¿vale? Los coches todavía no vuelan. Los tiempos se alargan y la realidad no es tan parecida como nuestra imaginación quiere que sea, ¿no? Entonces, ese crash, esa ruptura grande, o relacionado con tu segunda pregunta, ese gobierno o ese momento en el que la inteligencia artificial es más inteligente que nosotros o es capaz de tomar decisiones, es lo que estaba intentando explicar en la ponencia de una manera muy mala, lo siento, intentaré hacerlo mejor la próxima vez, si me vuelven a invitar, que posiblemente no sea así. Ese momento tan complicado, ¿vale?, en el que nosotros nos vemos invadidos es porque estamos delegando, y vuelvo a insistir, estamos delegando una inteligencia en un tercero, ¿vale? Y la inteligencia siempre ha sido nuestra. Nosotros somos los inteligentes, por encima de todo, de los monos, de los no sé qué, me da igual, nosotros somos los inteligentes. Las máquinas no, y eso nos da miedo, pero porque no nos planteamos la inteligencia artificial como algo que nos ayude, sino como un pavor. Nos ayuda a calcular, ¿vale? Se está trabajando mucho en que esto ya no solo sea ayudarnos a calcular o tener un mejor cálculo o mejor capacidades predictivas, ¿vale?, sino que nos permita, ¿sabes?, entender mejor, por ejemplo, nuestro origen de vida. ¿Vale? Algo, poderle consultar algo. Es un concepto muy divertido, eso es lo que más me gusta. La parte técnica de la inteligencia artificial es muy aburrida, ¿vale? Los matemáticos les encanta hablar de ellos, yo no lo soporto. Me parece que ya se resolverá las cuestiones técnicas. Es más importante la parte filosófica, en la cual nosotros necesitaríamos una inteligencia a la que le pudiéramos preguntar. Imaginen esa potencia de idea, en la cual nosotros tenemos una entidad a la que le podemos preguntar cosas y nos responde de una manera inteligente, ¿vale? Y dice, ese es corrupto, y viene Terminator y lo mata. No, eso es una broma. El tener esas respuestas es lo que nosotros estamos buscando y lo que nos ayudará a ser mejor. En todo caso, ese crash, vendrá de una convivencia. Será en un momento en el que la inteligencia artificial, o como se llame a futuro, será algo que conviva con nosotros y esté completamente integrado. No existirá, a lo mejor, la inteligencia artificial no conocerá el amor, tendrá otro tipo de relación con las personas. Eso es lo verdaderamente importante. Y eso va a hacer que nosotros vivamos mejor. ¿Por qué? Porque si damos por hecho que un dato está manejado por una máquina y ese dato representa, y vuelvo al tema de la corrupción, que es algo que a Manuel y a mí nos interesa muchísimo, porque es un problema muy grave, si ese dato está controlado por una inteligencia que le da veracidad, ¿vale?, y no entiende el concepto de la corrupción, ¿no sería maravilloso? ¿No sería algo alucinante? Yo eso no lo veo como un crash, como un boom, como que algo malo nos pase, sino como algo muy, muy bueno. Pero es porque yo entiendo que el ser humano como algo positivo, no como algo negativo, ¿no? Yeah. I'm sorry for the question in Spanish. Thank you.
So, well, we need this.
Oh.
You want to make that? Thank you.
You're welcome.
Okay, so in our last section, we really go where the money is. We have a few experts. Actually, Paulo is going to introduce our speaker. So, Carlos Asilis, that many people know. So, thank you very much.
Well, I think it's like the Terminator, you know, I came back by popular demand. Here I am. I mean, Carlos has been a friend for many years, PhD from Chicago as well. We worked together at the IMF, so we had like parallel track careers for many years. He has worked as strategist in the big houses, UBS, Credit Suisse as well. And then he knows how to make money. I remain as an economist, so I couldn't do it. And so Carlos, eventually migrated into the hedge fund industry, been very successful in several funds, including Vega, which is a big operation, an out branch of Santander in Spain. And then today, now he runs his own fund out of Miami, and I'm sure that there are going to be new ideas in the future. So I think it's a great pleasure to have Carlos here to talk about the markets, trends in terms of asset classes, and then we'll have a quick discussion with Carlos. Thank you.
Thanks very much, Paulo. First off, thanks very much to Manuel Santos, Professor Santos, and to Paulo for inviting me to participate this afternoon with you. So I'll share with you a few of my sort of tidbits in terms of what our thoughts are. As Paulo mentioned, the way we tackle portfolio positioning and portfolio investments is via a global macro lens, right? So what it means in practice is that at any point in time, we essentially hold and refine a thesis in terms of where we are at in terms of the global macro cycle, right? Particularly as it pertains to price dynamics and output dynamics. To many of you who are in the investment world, when one talks about global macro investing, one really talks about and thinks about a two-dimensional space, or two-dimensional world in which you have price dynamics along with activity momentum. And so that gives you a sort of a quadrant type of output space in which you can either have four possible scenarios in which you have either a combination of inflation, disinflation, along with either expansion in terms of activity or contraction. And each of these combinations along the price activity domain carries different type of implications in terms of how you want to position your portfolio. In particular, do you want to be overweight equities, own more equities, or own more bonds, or hold more cash, be more exposed to the dollar, be less exposed to the dollar, the same to volatility and other factors. So I just wanted to share with you in these minute and a half in terms of what we mean by global macro investing, as otherwise it will be hard for you to conceptualize or essentially allocate, place my comments in the appropriate cell. So with that, those preliminaries, our views in terms of the macro landscape, where are we at, the way we see it? Paulo spoke very, very generously about our past and our background. We do make a lot of mistakes. We get a lot of calls wrong. So humility is a very important attribute in any endeavor, human endeavor, and it is particularly of the essence when it comes to investing, as the biggest humbler that there exists out there is really the markets. The markets test you and prove to you each day whether you're right or wrong. And so, as I mentioned to folks that I talk to, and some seminars that I deliver to traders and investors, at the end of the day, you become humble either by an aspiration or just purely on account of profession. So, with that, what is our view in terms of where we're at the macro level? So our view is that we are at a potentially important and defining stage of the global macro and market landscape. What do I mean by that? I mean by that a couple of things. Global liquidity, which had been expanding on a sustained basis since 2009, is now contracting, is now going in reverse. Good example is the month of October. Month of October, to some of you who are invested in the markets, witnessed the largest downturn in risk assets since 2010. So it is interesting that pullback in risk assets that we witnessed in the month of October coincided with the tightening of liquidity, both on the part of the Fed as well as on the part of the ECB. In the case of the ECB, the quantum of asset purchases actually compressed by 15 billion. It marked the top of the cycle. from a behavioral perspective, it's more of a technical trading aspect. It's one of the reasons why we were cautious early in the month of October. But if you also look at the Fed and what the Fed did during the month of October, it further continued on its quantitative tightening mode. So the Fed is on a quantitative tightening phase. It is tightening liquidity overtly. The European Central Bank, it is unwinding. It is decelerating the quantum of its asset purchase program, which means that on the first derivative sense, it is tightening liquidity. So it is not an opinion. It is a fact that liquidity is tightening. Evidently, there are those of you in the audience who might feel that there are multiple definitions of liquidity. You know, rates, spreads, etc., and we can talk about all of that in the Q&A session. But the reality is that liquidity is tightening, number one. Second element that is important to any sort of global macro thesis is that the activity momentum is actually decelerating. Again, it's not an opinion. Some of my prior speakers today, this morning, Alex Werner and others, did allude to the latest estimates on the part of the IMF staffers, showing that the latest estimates on WIO, or whatever it's called these days, essentially mark a downgrade from the estimates, the projections that were generated 6 months ago or 3 months ago. So the momentum in terms of revisions is to the downside. JP Morgan also has a very nice forecast, JP Morgan revision indicator across countries and groups. Many of you who are in the industry are aware of it. They generated, essentially it's a compilation of the momentum of Wall Street economists' forecast on activity and growth on a 12-month forward basis. And you can look at it for any country around the world, any of the major ones, China, the US, etc. And that indicator is trending lower. So momentum on activity is going down. Liquidity is getting tighter. That's not necessarily a favorable backdrop for risk markets, for risk asset markets. But moreover, if you look at other elements of risk asset investing, namely risk premia, where are we at? Well, we have Mr. Trump. Today the markets are up nicely because Mr. Trump sent out a tweet that his discussions with China are going well. Of course, you can be somewhat conspiratorial in listening to that Twitter remark and say, well, we're a few days away from the midterm elections. The markets have taken a huge beating. So Mr. Trump wants to get a majority in both houses of Congress. So it's important to go into the weekend with a stable market. Technically, in terms of technical levels on the S&P and many indices, we're really at a defining levels from a technical trading perspective. So I think that you can come up with interesting stories on that. So, but the reality is that the bigger picture, removing ourselves from the next 3 days, is that geopolitical risk premium is higher today than it has been in a number of years, point number one. Secondly, elements of the risk asset markets, particularly term premia, when it comes to the fixed income markets, have been tremendously suppressed, are at a historical low levels. Now, we can talk about in the Q&A session in terms of what accounts for that massive compression in term premia. My view is that it has to do with the political mandate on the part of the ECB, the fact that I think the biggest bubble in the world today and over the last 45 years is the German Bunds, is the govies, the government bond market in Europe. That to me is the biggest bubble in 40, 45 years. And because markets are globalized, particularly the bond market, that compression of term premia is supporting long-term yields in the US. In any event, why do I say that? I say that because as central banks in Europe and the US are tightening liquidity, it is quite conceivable that term premia could actually move higher, which is not a good thing when it comes to risk assets. So looking ahead, I already spoke about the background from an activity cycle perspective, and I already spoke about liquidity. There's another element that I'm going to touch about in a moment, which is the dollar. But the third exhibit is we have this latent risk factor, namely very low term premia. And if that normalizes, that could impact other risk assets, including equities and credit. Okay. Now let's talk about the dollar. The dollar has been strengthening significantly. Now, why is that? And that's the fourth leg on which I'll shortly wrap this up, and then open up to Q&A and so on and so forth. The dollar has been strengthening this year. Partly is for many reasons, evidently, right? Is the geopolitical risk premium associated with the trade war frictions, but it's also a result of policy divergences, right? The fact that the Federal Reserve has been hiking, has been normalizing rates at a time when the Bank of Japan is sticking to its quantitative easing program, and at a time when the European Central Bank also has remained quite lax when it comes to liquidity and rates. So that policy divergence, I would submit as a thesis, again we can discuss this in multiple ways, has been driving the dollar higher. Why is this relevant for risk markets? You might say, okay, why are you talking about the dollar since we're talking about the global macro and market outlook? I think the dollar strengthening at a juncture in which liquidity is tightening and a juncture in which the cycle is weakening, or it might be weakening, we can disagree, is problematic from an investing and economic outlook perspective, because the big elephant in the room is debt. Global debt levels have continued to escalate since the Great Recession, even though Tim doesn't like that term, since the Great Recession period of 2007, 2009. So global debt, the balance sheet of the world, is a lot higher than it was then. Of course, assets have been generated, but we can talk about what kind of assets have been generated during that time. But there's a lot of debt in the world, and a lot of that debt is US dollar denominated. Brazilian corporates, Russian corporates, Chinese corporates, and so on and so forth. So a stronger dollar that coinciding with a weakening momentum in the rest of the world and with very, very high levels of indebtedness is also problematic for risk assets, right? The credit markets come under stress. I'll give you two exhibits. The default rate in China for Chinese corporates. Goldman has a couple of interesting reports Goldman Sachs, in the last 2 months, more than Merrill and other banks. The Goldman has been focusing on it. Default rates have been escalating very significantly. I think they're reaching a rate of about 5.5% to 6%. And the year hasn't ended yet. Much higher than last year. And second exhibit is month of October. The month of October marked the worst month for high yield, US high yield debt, in quite a few years. So I think that when we look at certain areas of the markets, away from emerging market equities, which have been decimated since the month of April, the month of October brought with us a lot of weakness. And many of you might think it's just the S&P, the Dow. No. Just look under the hood. Credit markets, other areas of the markets are showing that, there's stress in the system. So with that, those four pillars, you can pretty much infer from a market perspective what are our views. Our views are that given this policy divergence, given that we have a new Fed, we have Rich Clarida, someone we know from academic years ago. We have Powell, who's not an economist, although he's worked at the Fed. Rich he made his name in international, doing debt papers, as I did in 88, 87. He's aware of what's going on. But he's talking the party line. He delivered his first speech last week at Clarida as vice chair of the Fed, and he's pretty much sticking to the party line at the Fed, which means that they will continue to normalize rates. The president is challenging the independence of the Federal Reserve, right, as all of you are aware. And so what that may do, and what that is likely to do, is that will really reinforce the commitment of the Fed to maintaining to the raising of rates. So I think that if I look ahead, the conclusions that I arrive at is the Fed funds rate, policy rates are going to continue to go higher in the U.S. Let's find out what happens to the cycle. For now, there's some deceleration. Again, humility is very important. We could be wrong. Latest data shows that CapEx dynamics in the U.S., CapEx numbers, capital expenditures, actually have well undershot what all Wall Street economists have been expecting. Goldman, Merrill, all of the houses. So capital expenditure, which is the this is the paramount barometer of confidence on the part of CEOs and corporates in terms of future profitability and future profit margins. There's data. I didn't put together slides because I thought that the setup would be different. But if you look at a chart for the U.S. economy, the closest and most robust indicator, prior indicator of future profit margin dynamics is really CapEx. And so the fact that on a year when tax cuts have been so large in the U.S., the U.S. corporates have been deploying a lot of those savings to essentially the buyback of shares and not CapEx, doesn't leave much for optimism. So what do we do with all of that? What we do with all of that, I think that what do you do in this environment? I'm not saying that there's a recession around the corner. I think it's unlikely, just purely on arithmetic grounds. What do I mean by that? If you look at the quantum of the tax cut under Trump, along with the government expenditure increase, the impulse to growth, to GDP growth on an annualized basis, going to at least the third quarter of next year is about 90 basis points. It's 0.9%. So for a recession to obtain, well, you need given that CapEx has been dead in the water in the US, and given that the US economy is a closed economy, it's not really impacted that much by what happens in the rest of the world, you would need the consumer to go into recession in the US. And that's a very slow moving super tanker. I don't see any signs yet of the US consumer going to recession. So I think my best guess is that a recession is not yet a 2019 scenario or possibility. It might be a 2020. But markets, as I think it was Tim or Alex or Paulo mentioned, is a discounting mechanism. It looks ahead. And I think that we could have a situation where there is no recession next year, but risk markets come under pressure. What does that mean? That everything is going to go down in price? No. I think what do you do in those environments? If you look at the historical data and what kind of styles in terms of asset markets, not just equities, but other asset markets, what styles perform favorably in those environments, you essentially have value. Market segments that are cheap tend to do well. That actually was the case in October. So we got a preview, like when you go to the movie theater, we already got a preview. If you look under the hood, you see a lot of things. The market doesn't always show its hand, but if you look and work hard enough, you can detect what is happening. So I think value, where's value today? In global equities, essentially Japan, emerging market equities, although they're very volatile. And then there are secular growth, strong growth stories that are strong from a balance sheet perspective, and those are in the US. Software, we like software names. We don't like hardware, IT. And then you might say, well, how about bank stocks? Shareholder yield is close to 8%. Yeah, but we have Italy. We haven't spoken about Italy. I'll defer that to the Q&A session. Europe has an issue with Italy and with the whole concept of the euro. So we'll talk about it in the Q&A session. But to wrap it up on global equities, I would say that I would be slightly underweight because I think value had gotten crushed. Okay, and those would be the segments of the global equity markets that I like. I think you should barbell that exposure in terms of your portfolio by being overweight cash. The optionality value or the option value of cash should not be underestimated. Given that the uncertainty is high, we have midterm elections next week, and we have the direction of the dollar. The dollar is going bananas on account of various things, right? And we have the Italy question. If the Italy question, I think it's November 11th when it goes back to the EC, to the European Commission, perhaps good news comes out of it. I don't know. I mean, again, humility. I don't know. I don't have a say in it. So we just have to be cautious. So the optionality value of cash is important. And in terms of fixed income, I think that, what's the view? My fundamental view on fixed income is, and it's been my view since 2009, and we've had chat with, a lot of macro guys, including Professor Manuel Santos and others, and Lucas and many others, is that, and in a way Federico spoke about it, I believe that the micro structure of the global economy is eminently disinflationary. It's eminently disinflationary courtesy of IT. It is, the cloud, big data, AI, all of these wonderful things. They're disinflationary. They decentralize activity. They strengthen the contestable nature of markets, which essentially, the price discovery mechanism. And so I think the long-term outlook, I'm not concerned about inflation. Second point, many Wall Street economists, including the Goldmans of the world, Jian and others, always talk about, huge focus on wage inflation. And they tend to underestimate the fact that what matters to inflation is unit labor cost, right? 60 to 70% of the variance of inflation is captured by unit labor cost. And so if wages are going up because the economy is more productive, courtesy of IT and other matters, you shouldn't be concerned about the inflation boogeyman coming into the room. So I think that that doesn't mean, though, that I'm bullish bonds, especially with the Fed remaining very focused and really forced by Trump to hike rates. So I think in fixed income, I would keep duration short, just because I don't want to try to catch a falling knife with the Fed continuing to hike, and I also want to wait for a resolution of the biggest bubble in the world, which is the European government bond market. Right, the moment the European bond yields government bond yields normalize, that will impact global markets. And I don't know the scale with which that will happen. Why? Because there is no precedent for what we're seeing. I mean, the longest running government bond market, which is the gilts market, goes back 600 to 700 years. When you look at data, like inflation adjust those long-term yields on government debt paper, there is no precedent. I mean, you have an economy, I'll conclude with this, like Germany, right? Where 10-year paper is hovering at negative 2% on, again, inflation adjusted, an economy with no slack. Is the fiscal accounts are the strongest in years. The labor market is the strongest since 1991 or 1988. You have a very strong balance of payment position. You have a very competitive exchange rate. And yet you have negative real yields into the 10-year sector. So I think that, again, of course, you might say, well, Carlos, this is because Italy and the ECB has a mandate and under Merkel, et cetera, to keep the union together. But then it goes back to politics, right? We had elections in Germany the last couple of weeks. Angie is on her way out, Angela Merkel. And who knows what's going to happen if that happens. So again, I don't know. I'm not claiming that I know. I'm just claiming that that is a risk premium that I am not going to ignore. So I'll stop there, and thanks for your attention. Yeah.
Okay, so Paulo is going to lead the discussion, but also we have two graduates. Our first graduate, MBA graduate from the program Artists and Athletes, is Doug Honegger. He's been representing 60 players, so he's very interested in investment, of course. So welcome here. And Jose Licardo, just waiting here. He's interested in managing family funds from Venezuela and Latin America. And of course, we have Paolo. Okay, but Carlos, before you relax, Carlos, because I was organizing this conference, I think that I lost track of the markets, and I saw my Amazon shares going from 2,000 to 1,600. Yes, so this goes with your theory that growth is not going to do it, or there is something else. You're saying value, no growth?
Yes, I think so. On a medium-term basis, yes. On a medium-term basis, I think today the market went up a lot. Again, my take, could be wrong, is because of risk premium came down on account of the tweet by Mr. Trump on China, right?
Okay.
I think I'm going to follow up on part of your presentation. Carlos, actually excellent.
Thank you.
Really well done. I mean, I think the mix that I see, I mean, when you have the risk-free rate going up in the U.S., volatility is up, and that's my first part of the question. Do you see a higher volatility regime, more peaks like at 25% as opposed to the 10%, combined also with lower expected returns? That's a toxic combination. Yeah, it's like you have a horrible Sharpe ratio. So I think you gave already some hints in terms of your preferences towards asset classes, but I think for a household or somebody really managing their own portfolio, what would you recommend? I mean, against the judgment that usually it's better, to navigate through the markets without being too active, but you seem to suggest a rebalancing, certainly more towards cash. But the question is, what would you sell to raise the cash position?
Yes, thanks for the question, Paulo. As George Soros, says, and Stan Druckenmiller and others, I mean, volatility, especially the types of spike that we've witnessed in October in terms of volatility, at times tend to come at turning points in the cycle, right? Especially these huge spikes in volatility. In other words, there is some severe autocorrelation, if you will, on volatility when it reaches the type of thresholds, the type of levels that we saw in October. That's my view, and I think we're going through that. So what I would do if I were a retail investor, my advice, again, I could be wrong, don't follow it necessarily, it would be on any meaningful bounce, following the horrific month of October, any meaningful bounce, I would take advantage of it and rebalance away from equities into cash or sort of shorter duration, lower volatility kind of instruments, because I think we're in that sort of transition phase. Again, it could be wrong, but when you combine that with another element that I forgot to mention, which is that the technical position in the market is one of vulnerability for risk assets, right? What do I mean by that? Cash levels at mutual funds are at historical low levels at the beginning of October. They may have gone up during the month of October. I don't think they did because the sell-off was too quick and too fast. So we haven't yet seen a lot of redemptions during the month of October. So my claim would be, but we have to wait for the end of the month, EPFR and other data providers to tell us, is that cash levels are low on a historical basis, number one. Number two, the retail investors have not been buying equities. The real buyers of equities have been the corporations themselves, the share buybacks. This year, close to $1 trillion worth of stock is being bought by the companies themselves. So because we're just ending the earnings season in the United States, now corporates will be free to buy back shares. During the earnings season, there's a blackout period for corporates to buy back their shares while they're still reporting, and other companies in their sectors being in the process of reporting. So my sense is that now of course today with the Trump tweet, so that clearly supported the market, Amazon and others. My guess is that again we're going to see some share buybacks picking up, and we might retest, not close to the high, but the recent high. What I would do if I were a retail investor is I would take advantage of that and rebalance. That would be my sense. Yeah. Mm-hmm.
Just a second quick question, so we then share the panel with our colleagues. I think what it seems to suggest, when you have growing divergences in terms of business cycles across important regions, US, Europe, emerging economies, and you also have increasing divergence both in monetary and fiscal policies across key regions. With US, with Italy on the other hand, it seems like with this volatility regime, would this suggest a diminishment of the role of passive investment and really the hedge funds and active investors really regaining control? So who's going to be leading the market next year?
Thank you for that question. I have a very strong view. Of course, I'm somewhat biased, but because I'm biased, I'll just share with you, I'll provide you an answer that is based on numbers, on facts. When you look at history and you look at the alpha generation on the part of active money managers and hedge fund managers in particular in the global macro arena, it's very much correlated to volatility. So, and volatility, not just financial, but macro volatility. In other words, whenever, in periods in which of low volatility, macro and financial, they go hand in hand, macro hedge fund managers tend to underperform. And that was the case in the last 7 years. Conversely, whenever volatility picks up, macro managers tend to outperform. The same holds true for active money managers, because in periods of high volatility, the pairwise correlations tend to spike. Whenever, in other words, put differently, in environments where everything is going down, it's quite often because, especially whenever there are redemptions, investors are pulling the money out from mutual funds, etc. Managers, right, investment managers have to sell everything, right? They sell across the board, so the good gets sold along with the bad, quote unquote. And so those are environments in which the more sort of focused long-short equity hedge fund managers and active managers would take advantage of those sort of undiscriminating selling to essentially rebalance their portfolios by buying attractive stocks and selling the more expensive. So the active should do better if we're right from a macro thesis perspective, and the same holds true from a hedge fund managers. Time will tell. Yeah. Right.
Gentlemen.
Carlos,
Yes.
you talked about the strength of the dollar. Do you think it's a smart move to acquire loans in the Latin American currencies, transform them into dollars, and then invest them?
Yes, well, that's actually going short, right? Going long the dollar and going short emerging market currencies. That has worked brilliantly this year. I think the question is, do you do that? Do you do it going forward? There are two issues with that. If you do it, clearly only the very professional investors should do it because volatility is high, number one. Unless you really do a small amount, in other words, right size your investing, in which case for someone who's not a dedicated professional investor, then you might as well not do it. So if you do it, you should do so through a professional investor. The second issue is that because of the spike in rates, the carry, in other words, the cost of holding that position has become more expensive. For some countries more than others, like Mexico and Brazil more than others, although the real has strengthened. And then there are other countries where it's just very liquid. So I think that you have to be very tactical and very sort of opportunistic is the word, I think, yeah. So,
do you think the inflation and the devaluation of those currencies will also help? If it happens, even better?
Yes, if it continues, the question is what is the outlook on these currencies, right? I mean, I would defer to Paulo on the real, right, which is one of the biggest markets in Latin America and in emerging markets in terms of local debt instruments. So I think that I would, on a medium-term basis, I would look at, to put on the trades that you're mentioning, I would look at markets that offer value and that are strong from a balance sheet perspective. And so Mexico would be a lot closer for me to include in that set of investment sort of opportunities. And Brazil might not be as close, but again, I would defer on Paulo. And countries like Turkey are just too volatile and too indebted. Argentina, again, to me was when I looked at and I was asking Federico about the Argentine macro picture, which I have not been following, to me it really was a very episodic issue. I see a lot of value there. It's very different from, let's say, Turkey, where the macro picture has been very much mismanaged. Argentina has not. The fundamentals have been strengthening, clearly, and you get paid, although I'm not active in Argentina. So I would be very discriminating in terms of where you invest. I don't think I would just buy or go long the dollar against all currencies. There are certain countries where I would actually go the other way. Yeah.
Thank you.
Sure. Yes.
Just to follow up on the issue that you raised with Donald Trump and his position with the Federal Reserve today, do you think that when you look at sort of mini Donald Trumps in other countries, whether it's in Italy, in Austria, they're saying in Brazil today, do you think you're going to start to see more activist leaders trying to determine their respective fiduciary positions and influence their central banks?
Yes, no, thanks very much for the question. I think that this is an issue that I feel very strongly about. I mean, if you look back at the last, I would say, starting probably in 4 years ago, it is a global phenomenon, the ascendance of nationalism around the world, right? You look around, you see Modi in India is a nationalistic leader. You see Duterte in Philippines. You see in China, in some ways, even though it's a one-party sort of party rule system, there was essentially a coup d'etat of sorts in August of 2012, where President Xi and his team took office, and now he's president for life, very much of a nationalistic leader. Trump is very much of a nationalist. In Mexico, we have AMLO, who's a nationalist, of course. His credentials go back decades. In Latin America, we have a number of additional exhibits of that. So I think that that trend has various roots, which is not your question. Your question is, what does that signify for central bank policy, right? So that is, what it signifies is that it contributes to raising the risk premium, right? Because if you're an investor, right, and one of the beauties of this central bank era that we've seen in the last 20 years or so, or 30 years, depending on whether you go back to Volcker or whether you go back to Greenspan, is that transparency in terms of the communication of central bank policy. And that communication, the stuff that Mike Woodford, a co-author of Professor Santos, and that Bernanke implemented at the Fed, and others have done, is through moral suasion and guidance to anchor bring down term premia and long-term rates. A lot of that hinges, at the end of the day, on central bank autonomy and independence. And if you have a president of a country talking about, the Fed is doing the wrong thing, I might fire Powell, which is pretty much what he said last week, that he's now considering it. I, as an investor, what do I do with that information? I would essentially impute a higher risk premium on treasuries, right, as compared to paper from other countries. So at the margin, that's what it does. It reinforces that that claim that risk premium might be going up across the board.
It also emboldens other leaders as well to take the same position.
There's no question about it. Yeah. Mm-hmm.
Another question completely unrelated.
Yeah.
Professor Santos knows we've been talking about. I'm Canadian.
You're Canadian. Bank of
So
Canada. Yeah.
Obviously, we're a primary resource country.
Yes.
So when oil was at about $30 in the mid-30s, I went long on oil.
Yes,
And,
good.
and Professor Santos and I had numerous discussions about oil, and obviously, that was a bet that's worked out. Where do you see the resource industry going forward, and specifically the oil industry?
Yes, I'm not an oil specialist. I think that the little that I know, right, we do have an energy analyst at my firm. Is a she. She used to head the equity research team at JP Morgan in New York for all of the US, and she specializes in energy. And I learned some of this from her. The facts of the energy market seem to be, there are a couple of drivers, right? Number one is that the incremental demand for energy comes from emerging market economies. India, the Middle East, right? A lot of the energy consumption, energy demand is coming from the Middle Eastern countries themselves, where population growth remains strong, and India, China, Latin America, whereas in the developed world, the demand for energy is contracting, right? Certainly on a per capita basis, very significantly. Again, multiple speakers today spoke about some of the innovations that are taking place in the world, and some of them are tied to energy consumption, right? And so in terms of crude, which is what you're talking about, our view is that given our expectation that emerging market economies will continue to grow strongly over the coming years and decades, and given that most of the energy demand is coming from emerging market economies, the demand growth will be there. So what that means is that one cannot embrace a bearish energy market outlook on account of demand. So the question is, what does that leave for supply? You were talking about hydrocarbons particularly, right? On that issue, the question is, how substitutable, what is the substitutability in terms of renewable energy and the hydrocarbons when it comes to what is happening in India and China and many other cases? That's a micro and policy question. Again, I'm not an expert, so my opinion is very loosely held in response to your question, but I do feel compelled to give you a response, is that what I've learned, what I've read, and what I hear is that the substitutability factor is relatively low at the moment. Ask me 5 years from now, where is that? So I think that...
Are you including LNG in that as well?
We're including LNG. So I think that there, of course, there's the US supply factor, and there are multiple schools of thought in terms of whether, you know, the US is really going to massively increase its production of nat gas or not on fracking. And again, I'm not an expert, and we will not settle this. So I would say that, to me, looking back at the last 12 months, given the strength of crude prices at a time when this dollar has been strong, that's a measure of underlying strength in that market. Now, if there is a recession, or if the momentum in the global economy is to the downside, I would fade it. So we were very overweight energy up until about 4 weeks ago, and we've been fading it. We own a lot of Russia also, we've been selling it, now we're underweight, in some of our portfolios. So, but it's more tactical. It doesn't mean that I'm bearish long term, because we you know, as a macro manager, you know, you generate alpha by being tactical. You know, sometimes you do it right, sometimes you don't do it right.
Follow up, I think, on your question in terms of emerging market currencies and Brazil also, or effects versus rates. On Brazil, I think it really depends on having the implementation by the new government and the new economic team on a significant fiscal adjustment, all the reforms that they need to do. My intuition is that they are going to build up a very strong economic team. They're all US-trained PhDs, orthodox. But the first phase is the easiest one, which is make the beautiful announcements of security reform, fiscal adjustment, big primary adjustments. The devil is in the details, which is the implementation. And I think that's where I have more concerns, is with the political negotiating skills of the newly elected president and also of the economic team. So to me, if you're going to go Brazil, it's a classic buy on the rumor, sell on the news. So be very quick at selling. In terms of valuation, I don't think that the real is particularly cheap at the current levels after it rallied after the elections. I think that the values are either in equities, which, you know, despite the fact that they went up 30% in dollar terms, basically they're just rebounding from a huge collapse. Right. And they're pretty much flat in the year. And on a PE basis, the Brazilian Bovespa, I think, on the key shares, they are not, I wouldn't say cheap, but I would say there is good value for good quality companies, right? So I think you either express this Brazil trade through equities, or the other interesting alternative that if it works is not just to receive rates outright, but it's really to play a curve flattener, which means that you expect at the long end of the yield curve or 10-year rates, because there's a lot of fiscal risk premium there, a lot of inflation risk premium, that is going to collapse. So basically you play a yield curve as opposed to receiving outright. And I think that the question for you is, he asked about energy and oil. I mean, I think in this world that looks like risk aversion is increasing, and central banks also have been pretty avid at buying gold. What do you think about gold?
Yes, thanks for the question and for the insights on Brazil. Well, the latest data for the last month and a half show that central banks have finally begun to buy gold. So we like gold because of the option value. We view it more of a cash, cash substitute in a way, right? The option value of gold. Typically, we do like gold, and we like gold miners. So that's the short answer. I think that gold became very derated, very derated on multiple considerations, and so I think that what makes gold the gold price? We'll talk about gold miners separately, but the gold price correlates particularly with equity volatility. So it's essentially a long volatility. It will perform better than cash if they're during environments in which the equities and risk assets come down, sell off. And the question is how much more downside is there from here? I think the fact that interest rates have moved up significantly in the US, and we'll see what the Fed does, right, over the next year and a half. Our view, again, is that they might hike several times. Maybe they probably will hike in December. And I would say for the moment, I would pencil in at least 2 hikes next year. But I wouldn't hold my breath on it. So in that environment, given what's priced into the euro-dollar curve, I think that gold price might have some downside, but don't own too much of it. But it is not early to start owning some gold to build a position. So yes, so I would say that I do like gold, maybe not at the full sort of exposure level that I may have 6 months from now, but I think it's not to build a position. Yes. Sure.
I'll just say, Carlos, we downplayed a little bit what I think is perhaps the biggest threat, which is U.S. inflation.
Yes.
I mean, of course, there's a secular trend of inflation because of productivity growth. The U.S. has done a big fiscal push at a moment of full employment, and I think there is a real risk of inflation coming up, and then that will generate a repercussion, eventually a potential fight between the Fed and the
True.
executive. So how do you see
Yeah, how do I see that?
Back on that. What do you see the shape of the yield?
That's very good. Thank you. Very good questions. I hear what you're saying. I think there are 2 offsets, right? Well, there are 3. Number one, there are 3 elements in my response. Number one is yes, and I think you tend to agree, longer term inflation is not something to lose one's sleep over, right? Because of the micro and IT impact. Now, on a short-term time frame, which is the context in which you're asking your question, I take some solace in two considerations. One is that CapEx has not been picking up. And CapEx moves along with employment dynamics, right? They're both substitute factors in the production process. So I take solace in that, number one. And number 2, unit labor cost growth on a year-on-year basis is pretty much flatlining. So I could be wrong again. And then the third element is that earlier in this year, a significant number of states of the US Union hiked minimum wages for the first time in a number of years. So I would rather wait. Again, I'm not going long, I'm not betting that inflation is not going to pick up. On the contrary, I mean, on the fixed income sleeve, I'm very cautious because number one, because I feel that the Fed is being compelled by their sense of perhaps normalizing rates as a means to, to buying a put, right? If the cycle really turns lower, and also now, especially with the president exerting some moral suasion on it, they really have to assert their independence. So, but I don't think, again, I could be wrong. I'm watching the data. I'm not too worried about it. But I realize that it is a potential, a possibility. Yeah. I didn't answer your question. I didn't answer your question. Thank you. Yes, yield curve. Just a very quick response on the yield curve. Well, and your point on deficit, it is true. I mean, the Trump administration's decision to implement a fiscal expansion so late in the cycle, right, via government expenditure increases and tax cuts, is rather extemporaneous, right? It's rarely occurred during the post-war period. And it is so extemporaneous, in fact, that the CBO, the Congressional Budget Office, and other agencies are expecting, and Goldman and Merrill and other economists are expecting a budget deficit next year of close to 5.5% of GDP, even without a recession scenario. So if we admit the possibility of a recession in 2020, that budget deficit may end up being 9% or 8.5%. I think Larry Summers was on record saying that it could be 8%. So again, going back to Paulo's question, I think that, yeah, that flatteners, you know, that, I mean, the long end I don't think is going to, I mean, given that inflation is not term, is going to issue longer term, but given that the Fed is hiking, I think that the curve might flatten, but not a lot more from here. But I think that right now, given the sell-off in October, that we saw in October in the equity markets, the euro-dollar curve took out some of the hikes next year. So I don't think today is, if you were to tell me, put the trade on today, I think that the curve is likely to invert, to flatten from today's vantage point, just purely on where we're at today. Longer term, you know, we'll see. The curve might end up steepening for two reasons. One, the deficit, and two, if term premia normalize, if something happens in Europe.
No, Germany.
And then Germany.
Raising
If Germany, exactly, bond yields rise, it could steepen. So I think it's, but we need to wait for the ECB. It's a political question. It's Italy. We don't know. I mean, again, I don't know what's going to happen there. Sir, yes, at the back. Mm-hmm.
Yeah, it's more macro, but it follows on the last comment. You alluded to the elephant in the room is the increasing debt levels, right?
I'm sorry, I missed what you just said last.
Earlier on, you alluded to that the elephant in the room are the increasing debt levels.
Yes, globally, yes.
And one would start to get concerned if there was some irrationality to that. But when I look at some of the actions that are taking place in the market, for example, U.S. investment grade issuance going down 34% as per the Wall Street Journal article of today, from last month to this month. High yield debt issuance year over year going down 50%. You alluded to Japanese corporates rising their issuance in a period that was pre-trade war. I'm thinking these are rational manners that are actually kicking in the marketplace. And following up on your capex decrease, which is spending decrease, you would think that is rational, that players are taking a step back and saying, let's wait until to see more clarity, more visibility.
Yes.
So my question is, you concluded that you're not concerned about a recession kicking in, possibly not out until 2020.
Yes.
This is all normal, I would concur, and think that let the markets play this scenario out, and that there isn't really this irrationality unless rates start to really pick up as per what the media says that Powell's going to go in and fight against Trump, which is nonsense, I believe. But then you do get concerned about the debt levels. But as far as the market participants, wouldn't you agree that this is relatively rational?
Well,
What's been going on?
you mean the rationality? By rational, you mean the decision on the part of corporates to not issue debt? I mean, rational in terms of the price action, or rational in terms of the issuance that you mentioned?
In terms of the issuance,
The
by
issuance.
corporates to reduce their debt issuance, high yield, reducing high yield, the Asian players pre-trade war raising their coffers, so to speak, to weather out
Yes.
the trade storm.
Yes. Well, yeah, your point actually reminds me of what Federico mentioned about that quarter that he saw the downturn. And we saw that actually in the second quarter. I turned to Agustina mentioned it, that we saw in the Q2 of this year, what you saw in the earlier quarter period of your tenure in Argentina. The drop in issuance that we saw in the last month or two, I think is tactical. It's a decision on the part of corporates to wait out, similar to what the IPOs were pulled in the last couple of weeks. So I wouldn't infer too much from that. We saw the same thing in China, right? The Chinese numbers in the second quarter were stronger than some expected. And I think it was particularly on account of a lot of Hong Kong and mainland China names anticipating that tariffs would go up and so on. So they front-loaded a lot of that. It was some sort of, it would be the equivalent of the inventory buildup that you saw, which is a way of speculating in the FX markets. It's typical. So with durable goods items particularly, yeah. So I wouldn't draw too much from the recent episode. Again, you know, when you invest in markets, it's all probabilistic, right? You know, you work with different scenarios and you place probability weights according to each scenario. So what I shared with you was my baseline case. I could be wrong. And the weightings, the probability weightings that I would allocate to each of these scenarios will change over the course of time. Right now, that's my thinking. I think it pays to do the kind of rebalances that I responded to Pablo's question. Yeah.
Finished.
Gracias, José, por la pregunta.
And now our boss is going to speak. Thank you very much.
Thank you very much. I'm going to keep it very short and sweet at the end of a long but a very productive and informative day. So first of all, I would like to extend a few different thank yous. So when you do an event like this, you need a number of different ingredients, like when we're cooking a nice dish. I think the 3 different ingredients that we need here would be, the first one is that you need a good organizing staff. And we were very fortunate to have both on the faculty side, Manuel and Paulo, and then we had on the staff side, we have a number of people that helped out as well. Roni and Catherine, I would recognize, but there are many people that contributed to our event. So thank you very much. Of course, the second ingredient that you need is equally important, and that is you need a list of very good contributors that provide the intellectual content for an event like this. And we had terrific speakers here who traveled not only from Miami, from the US, but literally from other continents to come here and to give us new ideas, their facts, and also their opinions. So we appreciate that. Thank you so much to all the speakers as well. Also, equally importantly, we need you. So thank you for being the audience here. You need an audience that can absorb a lot of data, a lot of information. And so I would like to say you should thank yourself as well. Thank you very much, everyone. And the last point I'm going to make is just to say that we at Miami Business School, we recently launched a new marketing campaign. And one of the themes that we use in this campaign is "Tomorrow Lives Here, Miami Business School." And I think that's not just empty words, but I think this event and other events that we will have will put intellectual capital and context into that. So tomorrow lives here. That's what you experienced today. We were talking about the future of the economies in Latin America. We were talking about very hot topics like cryptocurrencies, artificial intelligence. We talked about new corporate strategies, investment strategies. So stay tuned, and hope you come back to Miami Business School again in the future for these type of events. So thank you very much, everyone.